All right. Welcome, everyone, to Nashville, to the Bitcoin conference. My name is Namcios. I work at UTXO Management, sister company to Bitcoin Magazine and the Bitcoin conference. And I'm here joined by three all-stars investors in the space, Asher, Matt, and Greg. I would love for you guys to introduce yourselves before we get into the content.
Thank you, Namcios. Hello, everybody. Thank you for attending this panel. My name is Asher Corson, and I run a pretty new hedge fund called Unbroken Chain. Unbroken Chain is the first Ordinals hedge fund, the first hedge fund that exclusively trades Bitcoin native assets. So we trade Ordinals, BRC20, and runes.
Hi, everyone. Matthew Sigel, head of digital assets research at VanEck. VanEck's been around in Bitcoin since 2017, the first traditional fund manager to file for an ETF. We now have Bitcoin spot ETFs in the US, in Europe, and Australia. And we have a couple of liquid token strategies that we run actively out of New York, so I manage one of those. We have an ETF that owns Bitcoin miners, so we show up as a top 10 shareholder of most of the Bitcoin miners. We have a stablecoin and an NFT project.
Hi, I'm Carson, Humla Ventures. We are a venture capital firm investing in Bitcoin ecosystem, pre-seed and seed and secondary investments. Before that, I come from XPTO, one of the first Bitcoin market makers since 2014, where I was a head of ventures and corp dev and marketing stuff there as well. We've been investing since 2017 in roughly 65 companies, everything from Deribit, which is the leading market maker, all the way through season 2 investing, which we're doing now, where we're in Omega, Velar, Arch, a few other ones, and we're also investor with Namcios' UTXO fund as well. So we do some fund investing as well. So we're quite active in the space, and I'm very excited to be here and very happy that Bitcoin Magazine is doing such a great job for everyone here.
Thank you. Cool. So I know the title of the panel is Investing in Bitcoin Season 2. Before we get there, if there's a Season 2, there must have been a Season 1, right? So what was, or still is in parallel, Bitcoin Season 1? Greg, you want to?
They look at me because I'm the oldest here, I think. Season 1, I think, the Season 1, Season 2 is a really interesting discussion. I think Season 1 is, obviously Bitcoin was created, and the first, up until I'd say Season 1 includes everything before Ethereum came out and all the way up through Lightning, essentially until Casey invented the Ordinals, or invented/discovered that Ordinals was possible. I would say the main definition is, I think Season 1 is like all the Lightning development, all the introduction to federations, all the SegWit, the initial BIPs that came through, and the way that the industry kind of formulated. Then Casey made Ordinals, and it was kind of like a realization that Bitcoin was capable of innovation without permission and without change. So, now we had Taproot come in, and there's a massive amount of innovation around that. But all the stuff that we're seeing now is Season 2, which includes both innovation, and I think I like his very clever title for the panel, both innovation and new assets with Ordinals and non-fungibles. I think you guys want to say something around that. So,
yeah, I think it's totally fair to look at Bitcoin Season 1, Season 2 as a technology progression, which is kind of how you're framing it. I guess my self-serving way to do it would be Season 1 is pre-institutional adoption and Season 2 is post. And you can decide if you want to date the beginning of Season 2, either from the El Salvador announcement to adopt Bitcoin as legal tender, which if it catalyzes additional, that'll mean that countries have no choice but to deal with this at the institutional level, or you can date it from the launch of the Bitcoin ETFs. And just to give you some context on the Bitcoin ETFs, collectively, they now own about 5% of all the Bitcoin outstanding. That's more than Bitcoin miners own. That's more than governments own. That's more than corporations own. That's more than 5x what gold ETFs own. So gold ETFs own less than 1% of all the gold outstanding. So we're well into the kind of institutional adoption Season 2. Personally, I've written most about Bitcoin's adoption as a medium of exchange for international trade and for countries to monetize their stranded energy, and we just put out some research on that this week that I hope to solicit your feedback on because we think the energy story is very compelling for many emerging and frontier markets.
Asher, I know you have a very strong opinion on Season 1 versus Season 2, but just before we jump onto that, Matt, I'm glad that you brought up the institutional part of it. I wonder if you have, just to close the loop there, what are the opportunities versus like the worries that you may have regarding this institutionalization of Bitcoin?
Okay, I think there's two ways to answer that. One is that sitting in the U.S., I can say clearly that most of the investment management institutions have not arrived. So it's very difficult for banks and publicly traded brokers to custody this asset, and basically none of them have put out yet the type of asset allocation models that we think are going to drive consistent flows. There's some hopes that Morgan Stanley may be very imminent as they put out a primer last week that we're hopeful is going to be trickle down to the advisors. And notably, when we looked at the quarterly filings of hedge funds, pension funds, money managers, hedge funds bought twice as much Bitcoin as investment advisors. And that's despite the fact that hedge funds manage 1/10 of the assets, or 1/5 even. So my prediction is that when we look back at these numbers in 3 quarters, investment advisors are going to own 5 times as much Bitcoin as hedge funds, and that'll be tend to create a lower volatility, as Chris was talking about in the previous speech. So. But what you might have been hitting on, though, was like, are we going to F things up for everybody by centralizing all the Bitcoin, And I did hear some complaints from, like, that guitar-playing Bitcoin guy yesterday. And Bitcoin is what you make of it, right? Everyone has to buy it and use it, and it's a free market, and whatever use case is most powerful is going to win out. I have confidence about that.
Good. Yeah, I think we all agree about the free market part, especially. And now, yes, Asher, I think the free market is a good way to introduce your own idea and thesis on Bitcoin Season 1 versus Season 2, so I would love to hear more about it.
Thank you. So a lot of the discussion that I've seen, at least around Season 2, has been framed in a slightly different context than what Matt was talking about, even though I actually agree with his framing a lot. The discussion that I've been seeing is people are talking about layer 2s on Bitcoin. People are talking about BitVM on Bitcoin. People are talking about OpCat on Bitcoin. And then they throw in Ordinals, Runes, and BRC20 are also part of Bitcoin Season 2. So my view is that the first 3 things that I mentioned, BitVM, OpCat, layer 2s, these are extremely exciting technologies that may pan out and may be important and may cause a huge amount of development and liquidity to flow into the Bitcoin ecosystem. But the reality is that it's that 4th thing I mentioned that caused Bitcoin Season 2, and it's that 4th thing I mentioned that is, at least currently, in my opinion, accounts entirely for Season 2. And that's Ordinals, BRC20 tokens, and runes. And the reason that I say that is that basically from the moment that, and Greg touched on this, and I strongly agree with him, from the moment that Casey Rotemore put out the Ordinals standard, the amount of interest in Bitcoin from a development perspective has absolutely exploded. I mean, people have used the term that it's a Cambrian explosion on Bitcoin. And what I would argue, and the last point I'll make right now, is that the excitement around BitVM, the excitement around Layer 2s, the excitement about OpCat, all of that is a result from the excitement and liquidity that flowed in from Ordinals.
Yeah, I can end. Obviously, he agreed with me, so I like him a lot more right now. But to disagree with him a little bit, which is I definitely think that the Ordinals was everything. I like this institutional angle. I think the trigger for Season 2 is much broader than institutional. I think the institutional come in is a very important part of Bitcoin. But the Season 2 concept, and to disagree with both of you a little bit, which is I think the trigger was what he said. The Ordinals, Casey, Domo with the BRC20, and the fact that those assets are all like tradable and growing and market cap oriented, and then be a little bit self-serving on the venture side. We have now maybe 100 or much more than 100 companies which have attracted massive venture capital. And that means that there's a ton of Season 2 development happening on the tech side, which were not happening before Casey's creation, invention, and so the institutional, the Casey, the Ordinals, all these topics that I totally agree with. I don't think we've even seen I don't think we've seen 10% of Season 2 at this point. I think there's a lot of stuff happening under the ocean floor of Season 2. That's we're getting closer to the shore, and the waves about the energy is going to come. Because once we have Arch with their kind of layer 1.5 tooling, we have Liquidium, we have Omega with lending, we have Velar with BTC Perps, we have ZK coming on to. I mean, we have all this innovation coming, and then boom, if OpCat or one of the covenants gets approved, that will be a crypto life-changing event, because all of a sudden we have smart contracts in proof-of-work environment on the most secure network there's ever been. And that is the culmination, the cresting of the wave of Season 2, which I could predict, I think. And just to hold for 2 more seconds, and it comes back, I was talking with Peter McCormick 2 years ago, my vision of Bitcoin is like a pyramid where all the shitcoins exist to get innovation and funding to everybody. I love that as all the layer ones and core innovation. And eventually, anything that's good will end up on Bitcoin. And that's what we're seeing now. Season 2 is hey, Ethereum and all these people did all these really interesting things. We're bringing DeFi, we're bringing MAV, we're bringing ZK, we're bringing Layer 2. Bitcoin's technology has to kind of catch up, but it's everything. And then the institutional side, coming from institution, I was an investment banker before, it's just amazing that it's all happening now. El Salvador and the banks, VanEck, you guys doing an amazing job. And it's in my mind, it's 5 years before I could have imagined it happening when I started getting into Bitcoin. So it's just exciting.
Any counterpoints or thoughts on that, Matt?
Well, I guess when we look at the Layer 2 landscape right now, there aren't a ton of liquid tokens. There seem to be many projects that are kind of pursuing the same strategy of attracting TVL from Bitcoin whales and introducing some lend borrow. So when we think about our position sizes, and Jan VanEck, the CEO, broke this morning on the main stage, he has more than 30% of his personal net worth in Bitcoin. We put $75 million off our balance sheet into the HODL Bitcoin ETF. That was the largest seed by far. So when we make our case for why VanEck and why VanEck the Bitcoin ETF, we say we have the most skin in the game. We put more money in than asset managers that are multiples the size of us. We have the best research. We have the best engagement with our customers. But if you look at our Layer 2 exposure, it's de minimis, probably less than 10 basis points. and just waiting to see more product market fit from some of these projects. But having modeled out some price scenarios for Bitcoin, I would say that I don't think the layer 2 opportunity is priced in at all. I don't think OpCat is priced in at all. We assume that all of these proof of stake networks are going to be winner take all, and to the extent that Bitcoin can add smart contract capability and be a real competitor versus those proof of stake networks, there is huge upside.
Can I add for that? I think I actually want to vehemently agree. Which is that the layer 2 concept is there, and there's a lot of venture coming in, and actually we haven't invested in many of these layer 2s because the bridge is scary for me, and the fact that it's not a true TVL, and I think that unfortunate for some of the entrepreneurs around, I think that they're all full of themselves in their head right now, and the valuations have launched way out of control, and they're going to launch liquid tokens, and there's going to be massive realizations of what the real price discovery is on these. So my excitement for investing is still there. We're still making deployments in some of these early companies. Some of them are very solid, but there's a lot of hubris and a lot of assumption that they can amp up their valuations with no real product and traction, but they're going to get liquid, which is not the old VC way. So I would agree with you that it's just not there yet. I was just saying, my point was that the excitement from the investment community and the excitement from entrepreneurs, we're getting real talent entrepreneurs where we didn't have that in Bitcoin at all before.
Yeah, I mean, you got to love the momentum in the venture side. What we tend to see from the launch of liquid tokens is that they come to market with a great narrative and the price is very high, and then they correct by 70-80% and go through this trough of disillusionment, and that's where we want to step into high quality projects, is kind of after that drawdown.
I think everybody mentioned one idea that to me is core to Season 2, that is bringing those developments that have product market fit outside of Bitcoin, bringing it back to Bitcoin, right? And nurturing this environment. Now, I would argue that, and I would love to get your thoughts, but we've seen some developments that have arguably not found product market fit.
Some? Most?
Yeah, and speaking of, the bridges, the layer 2s, we've seen that create a huge fragmentation on the Ethereum ecosystem, right? You have Arbitrum, you have OP, you have a lot of these layer 2s, and is there, how do we see that on Bitcoin? Because it seems that we're walking towards the same path of fragmentation and all that. Asher, you want to?
Yeah. So just a couple quick things. On the layer 2 discussion, I agree with what these two guys are saying. Our view as a fund that trades native liquid Bitcoin assets is that there will always be a premium. That premium will shift, but there will always be a premium to trade these assets natively on Bitcoin, because the reason that people want to do that is because those security assumptions are not repeatable. As far as Namcios' point, I'm looking forward to hearing what the other two panelists have to say. But I'm going to answer it maybe in a little different way than you might have expected, because I actually have been watching that dynamic already play out to some degree on Bitcoin for a really long time, at least since I've been in the space. There's constantly new narratives coming out about what technology people in Bitcoin should be or are going to use. They include Lightning. They include the Liquid network. They include Taproot assets. They include RGB. The truth is that nobody's really using any of that stuff. So I think that, the way that I look at it is, it really doesn't matter until actual users of the Bitcoin network care about it and are using it. And, the influencers that try to tell us, this is going to be the next thing and this is going to be the next thing, it may be the case. And I think it's important to pay attention to those predictions. But I guess I would just say that almost all of them in historically have been wrong.
Greg, I know you had something to say about this point. I'll go to you in a sec, but Asher, do you think, touching on this point that you brought up, do you think there's a curse in Bitcoin that we try to build tools first and then find users after? Do you think we've been seeing that, as you yourself mentioned, like since forever?
Yeah, I guess it's a curse in some ways, but it's also, I view it maybe also slightly as like a blessing in the sense that I think the only way to find product market fit is to experiment. I don't think that there's data or research that you can conduct to give you an idea of what product will for sure succeed. Otherwise, everybody would be doing that same research. We sort of just have to try a number of things. And I think that's what, from my perspective, that's what's so incredible and significant about both what Casey did with Ordinals and what Domo, who's one of the partners at Unbroken Chain, did with BRC20, the inventor of BRC20. They put these technologies out. There was no hype. There was no influencers peddling them or pushing them. The market just loved them, and they were adopted literally overnight in both cases. And I find that to be pretty exciting and inspiring, that as an ecosystem that hasn't had a whole lot of innovation for quite a while, we're really embracing it now.
Any counterpoints, disagreements, or agreements?
I guess I would say that for those who are bullish on a Bitcoin Season 2, the best way to play it may be the Bitcoin miners. So think about how the proof of work network works. The fees go to the miners. You don't get anything for staking. And when you look at these Bitcoin miners, a number of them went bankrupt in the last cycle. They had too much debt. Their balance sheets are dramatically improved. Listed Bitcoin miners now control an all-time record share of the hash rate, nearly 30%. And they're currently monetizing a beautiful arbitrage in the market where the AI and high-performance compute companies like Google and Amazon can't get enough of the power, and the Bitcoin miners, have too much power and don't exactly have the balance sheet to fund it all. So by diversifying, they're really doing wonders for their stocks, and the stocks are outperforming. The companies that have been most aggressive in making those pivots are all doubles this year, and yet most of the Bitcoin miners haven't really announced their plans yet. So I think that may surprise everyone, and we have an ETF obviously in the space, DAPP, which owns all these companies, but it's a different market dynamic for the miners than it was last cycle, I think.
I think that's also a warning to the Bitcoin ecosystem, which is the miners and the developers have to create things that make revenues for the miners to keep Bitcoin decentralized and interesting. If, for instance, they make tons of money in the AI and they stop mining as much, it's going to be horrible for Bitcoin. So we really need to, so that's why I'm a big fan of Ordinals. That's why I'm a big fan of OpCat. If OpCat gets pushed in, if we have covenants in Bitcoin, the miners their revenue potential explodes from fees.
Question for Asher, if I may. I think Marathon has announced a Bitcoin L2 that they're working on, and that I've often asked the miners, part of your job could be to market Bitcoin, right? If Ordinals succeed, it's probably good for you. What are you doing? Is that an interesting project? Should we look to the miners to innovate in this space?
It's a great question. Yeah, I think it's extremely interesting. I think out-of-band use cases that I think Marathon is also looking to support through their product. I think there's tremendous potential use cases there that are sort of hard to imagine right now. But some ideas of some things that people have been doing is they've been using these out-of-band transactions to create inscriptions that are larger than you'd normally be allowed to create in some of the largest Bitcoin transactions ever. And that's been a demonstration of something pretty historical. But as far as more tangible use cases, I'm not exactly sure what they would look like. From my perspective, just on the L2 thing very quickly, the two things that we would be looking for is, people like to talk about trust minimization. I think that often that's an obfuscation of the fact that the trust assumptions are actually quite centralized. And I think BitVM and OpCat, I'm not exactly sure how because I'm not an engineer, but I hear from people that are a lot smarter than me that both of them, and especially in combination, could allow for a layer 2 that really does have a fully trustless peg. And if that's the case, I think whoever gets to that point or gets as close to that point as possible, I think wins, and they win very quickly. And I think TVL flows, within days.
Yeah, I think to your point, with BitVM, you have a 1 of n trust assumption. And then there's this theoretical on OpCat, but if we get OpCat and then you're able to build like the cat VM in the perfect way, then yeah, you would have like a trustless assumption. So I think that's one of the, and then right now, what would be like, it's even far behind that, right? If you have like trustless with cat VM in the perfect world, let's say, with OpCat, and then with BitVM, you have 1 of n being like the participants, and then now you have the multisigs, right? Everything's a multisig. So pretty much you have like the quorum of the multisig, so it being like a 2 of 3 or a 3 of 5. So I think it's slowly beginning to like enhance the trust assumptions, but I totally agree. Bringing back to the point of the miners, and yeah, that was to me at least very surprising to hear of playing the miners game. And I think we've seen like both worries, and I know Greg, you mentioned how the miners being profitable is good for Bitcoin. I think we're also blessed that there's this autonomous or automatic rebalancing of hash rate and miners and all that. To your point, Matt, do you see, I know you mentioned like the previous cycle, we had a lot of miners going bankrupt. Do you see that those errors being repeated this cycle? What has changed so that people can invest in season 2 through your...
the miners have just been much less aggressive in borrowing money. So unfortunately, they've continued to dilute the common shareholders. So there's that headwind that to deal with, but there's less debt. And despite the extremely low hash rate, the listed miners have gotten enough scale that they're still profitable even after the halving.
Yeah, and we also saw yesterday Marathon announced that they're back with the HODL strategy, right? I think this was the clear signal last cycle that things were going a little bit south when all the miners that were said that they were committed to like holding every Bitcoin mine started like selling, offloading. So that could be like the yellow light if we see that get repeated. Asher, Greg, any thoughts on this miner dynamic and how to position?
Already said, but I think the miners are incredibly important for the ecosystem. And Asher, yes.
I guess I'd just say that I've watching the mining stocks for quite a while. Definitely not nearly as much of an expert as Matt on it. I think seeing the lower leverage is definitely great. I think the problem has often been in that market that when things start getting frothy, that's when they start taking on that leverage, which is the exact wrong time to do it. So I guess I just point out that I do see that also as a risk with the miners.
Leverage always bad.
Cool. We're nearing the end here of the panel. I wanted to again thank you guys very much for your thoughts, your ideas, and thank the audience as well. Before we wrap up, or actually, so that we can wrap up, where can people find you guys, find your work, and stay in touch with the big brains of yours in the space?
So I'm on Twitter as L Asher Corson, LASHERCORSON, and my DMs are open. We love talking to potential investors, but we also love talking to anybody that's interested in Ordinals and trying to figure it out from an investment point of view, because we view ourselves as advocates for it.
I'm on Twitter, Matthew_Sigel. And just to plug two things, we recently hired an early stage venture manager. So we're going to be writing some early stage checks. Feel free to pitch. And then our stablecoin Agora Dollar, it's backed by VanEck, is now the fastest growing dollar stablecoin in the world. Would love to do a Bitcoin integration. If anyone wants to help with that, find us.
And then my socials are all the same. It's Prophet, PROPH, the number 3 and 3 T's, Twitter and Telegram and whatnot. And we're always looking for early stage entrepreneurs that are doing some interesting things. We're willing to invest. And also, if you have anything to add, or you have some insights on the sector, we're always interested to hear. So reach out.
Awesome. Thank you, everyone. Have a good rest of the conference.
Thank you, Namcios.